Hello everyone, this is Suslov, Head of Capital Markets at A&D Mortgage with our AD Weekly Digest. As always, we're here to shed more light on economic events, mortgages and market forecasts. We had an eventful week with CPI and FOMC decision. In my opinion, we're on a good track today with economy cooling off. A&D has improved non-QM rates by 37.5 basis points, which relates to over 1 point price improvement on the majority of these scenarios. I want to remind everyone on our future release of a renovated jumbo program, introducing 15-year fixed and ARM products at a phenomenal rates. With this being said, turning it to Billy to get more insight on the FOMC meeting and year-end results.
Hello, Alex. Last Tuesday, we got the bullish inflation report, which showed CPI to be 0.2 lower than expected. The year-over-year component declined for the 5th consecutive month, the first time that's happened in more than a decade. And while that doesn't prove that we've seen the worst inflation we're going to see, with CPI at 7.1% versus the 9.1 reading we had in July, it could be. Upon its release, Treasury yields spiked down more than 20 beeps, but the low yields were all made in the first hour that followed. And only the 5, 3, and 2-year Treasuries made new low yields of the recoveries. Next up was the FOMC meeting. And from it, we learned that the Fed has raised their expectations for Fed funds and for inflation over the next year. So with all of that said, the Treasuries remained well bid all week, but the low yields that were made just after the CPI report continued to hold, and one had to wonder what better news the Treasuries could possibly get. That said, with year-over-year CPI still at 7.1% and the Fed winding it back down to 2%, they clearly are not going to be lowering rates anytime soon. And despite the hawkish tone that came out of the FOMC meeting, I think Fed funds are close to where the Fed will pause. For quite a while, it seemed like 5%, give or take a quarter, was where Fed funds were headed, and we'll be in that range by February 1st. On Thursday, we get final GDP and a lot more, and then on Friday, we get the core PCE price index, and then with one more inflation report and one more jobs report prior to the next FOMC meeting, all of that could be what determines if 4 3/4 in February or 5 to 5 1/4 in March is where Fed funds end up. That's pretty much how things looked when we did the digest last week. It's pretty much how they looked when we did the one before that, which was 3 weeks prior. But now, figuring out exactly what a 5% funds rate is going to mean for Treasuries is a different story and one subject to far more debate. When this year began, the 5-year was trading around 1 1/4 on its way to 4.50 on October 20th. And just one meaningful rally occurred along the way, which lasted about 7 weeks and covered about 100 basis points. That's almost exactly what this current rally has done. And while it has yet shown no signs that it's about done or that it has completed, the timing and the levels are more than a little intriguing. If the October 20th yield crest do not represent the ends of the cycle degree moves up from 2020, then I suspect the next round of new high yields will. And if they do, and if that's the case, I would expect it to happen early next year, and with yield crests not much higher than the ones we've already seen. Once these cycle degree moves are complete from 2020, if they're not already, I think the yield crest will hold for a year, if not 2. And I think with the moves up in yield already in the 400 basis point range, corrections in excess of 200 basis points could be expected. So while I sit here and think that the Treasuries are in a bear market for the first time in 40 years, I think we're also likely to see far better markets for much of 2023 and well into 2024. So I wish everybody a happy holiday season, and kick it back to you, Alex.
Billy, I appreciate the overview. I wish everyone can get some rest this weekend and enjoy Christmas with their families. Make sure to follow us on YouTube channel, like this video, and subscribe to Billy's daily market newsletters to stay on top of the capital markets events. Thanks everyone, it was Suslov, Head of Capital Markets at AD Mortgage. Stay tuned.